Hey guys, this is a market update. Big week for cryptocurrency this week. We have inflation figures coming out tomorrow, and then the FOMC the day after, telling us if the Fed is done with rate hikes. What's happening here? What do we expect inflation to be? And what do we expect the Fed to do? We've got the data right here, so we'll go through that. This is specifically for BTC. The regulation came out last week, the SEC calling everything a security in crypto. Now, that's obviously not true. Specifically within the law, it's legally not true, but it is what it is. The SEC, on purpose, made the entire crypto landscape incredibly opaque and has forced capital flows out of crypto. Now, that's on purpose. That's specifically the purpose of what they were doing, potentially at the same time that the macro and economic cycle is changing. This is a pivotal time for crypto, and all of the, the SEC regulation will get worked out over time, and things that are securities will be named such, things that aren't obviously will be named something different. But it is a specific attempt to crush crypto just as the macroeconomic cycle turns, in my opinion. I'll show you this data right here. As for BTC, it's been affected fairly negatively because of all of this, but not so much, to be honest. We are still within this uptrend right here and a descending wedge, which is actually a bullish pattern right here. And this is going to play out perfectly when CPI comes out, which, if very low, could see a bid up for BTC. However, there is no new cash within crypto, right? The regulators around the world are really, amputating all of the limbs that actually bring new currency into crypto. And so there's just no new money here. And so for me, the rest of this year could just be crab sideways. Like I've said for a long time, going up to new highs is not going to necessarily happen until you get some real money flows into crypto and actually growing again. That's not really where we are. So for me, we may just kind of break through this pattern like this, just be fairly weak, sideways, maybe, some news coming out that pushes us up and then we push down again. So again, I don't think we're in a massive uptrend that's going to blast through this resistance. Consolidation for the most part. If you are a trader though, check out Bybit, check out BitGet via the links in the description. You can get, 30K deposit bonus on Bybit. So check that link if you are a trader. The crypto market is completely exhausted right now. And that's specifically what regulators, governments have wanted to do. They've exhausted all of the speculation and also, just the money flows in. But if you're a macro investor or you're an investor for the long term, this is obviously an important time. You're not going to make those 5, 10x's when buying at the top of a bull market. And so you do have to take some risk if you want that. However, for Bitcoin specifically, a macro asset, what we're looking at is the turn of the economic cycle. And we're at the bottom period of that. So what we can see here is that forecasts suggest that inflation will come in at 0.19% and that the core inflation is going to be 0.45%. So that would lead to annualized around 4.1 and 5.3. So still very high. However, you're getting to the point now where the Fed's interest rate is essentially at the level of core inflation. And usually they stop raising at that point. And so what we can see here is that the consensus is 0.2. This is for the inflation rate. Now, the consensus for 0.2, if that works out right here, that's annualized at around 2.4% for inflation, right? So the target's around 2, but we really got to look at core as well. Core inflation is still very high. And so you can see here, consensus is 5.3 annualized, but this is coming down. So if we look at the line chart right here, you should be able to see core, it's high, but it's coming down, right? So that is something that we need to come down further. But like I said, if the Fed is up there with their interest rate, that's usually when they stop and pause. We also have this data here, which shows that the market believes that the Fed is going to pause at this meeting. So 73% probability, that's priced in by the market. So if they don't pause here, expect a lot of weakness, especially altcoins, Bitcoin as well, because that's going to be a surprise to the market. However, the Fed usually, they flag what they're going to do most of the time these days. And so they've kind of told people, we're going to pause at this. Now, in my opinion, if we look at Bitcoin, when the Fed are pausing now, I would say that the probability is 80 to 90% that they will never raise again in this cycle. What they are going to say in the press is that they're going to pause now and wait to see the data. They obviously can't back themselves into a corner and say, we're never going to raise again. They just can't do that. However, it's extremely rare for a pause and then, another raise. So what they're now thinking is that they have raised rates, they've done enough to create a deflationary shock to bring inflation back down. Once they're done, what we're going to be seeing is potentially leading economic indicators actually coming worse, which means that all of that central bank intervention on the hawkish side pretty much done at this point. And we know how Bitcoin reacts to this in a general sense. So what we're seeing here is that we are at right now recessionary levels. You can see that the current contraction is the indicator. It's consistent with recessions in prior decades. Every single time that the leading economic indicator comes down to this level, it has been followed by that recession. So as you can see here, each and every single time, we're at this level right now. So this is feeding into the fact that the Fed may pause, because this type of data, it doesn't change, right? So we could actually see a much bigger contraction and maybe leading to a recession. We're seeing the job market get a little bit weaker. You're seeing initial jobless claims start to tick up a little bit. It's very early, but it's the potential of a reverse in the trend. And so you have to invest for that over the next 6, 12, 18 months. Things are not going to be more hawkish then, in my opinion. I don't think the Fed are going to be higher than this, unless something strange happens. So we're seeing the end of this macro cycle. Now, what that means over the next 6 to 12 months and 18 months is potentially more risk on in markets on the risky end of things as rates expectations come down and hawkishness comes down. Maybe that's why the SEC came out last week and tried to destroy all of that speculation in crypto, because they know what's happening and they don't want money to flow back into that. That's maybe a speculation on my part, but it would tie in pretty well with where we are in the economic cycle right now. The major issue for altcoins is that this is the part of the cycle where they really don't do very well in. Plus, you've had regulatory action. So people are looking at these coins thinking, what is the fundamentals of these now? And so they may just drip in Bitcoin and ETH terms, continually through this part of the cycle, maybe for the next 6 months. What we're seeing here is buy-side pressure into exchanges has really come to an end. Towards the tail end of last year and the beginning of this year, buy-side pressure has really, pushed us up from the lows. That seems to be coming to an end right now. So a neutral market, I wouldn't say it's bearish, but it's a neutral market. And so in a neutral market, what you're going to get is a crab sideways and then potentially just dripping into the majors as the majors outperform a little bit. They may not necessarily go up in value, but they're going to go up in dominance versus the long tail of crypto assets, which just continually drip away for this part of the cycle. You can also see this with the regulatory action from the SEC. Bitcoin coming off dominance lows, just going up and actually seems to be breaking through this resistance level here. So we may see that drip higher through this part of the cycle as well, especially as the macro turns and people just feel much more comfortable putting money into Bitcoin rather than some altcoins because they're just unsure of what's going to happen there. So Bitcoin dominance really getting a lot stronger during this part of the cycle. Ethereum as well. This is Ethereum versus Bitcoin. So the exchange rate between the two. And, I still see this as an uptrend. You can see this over the last few years, a big uptrend. However, since 21, it's crabbed sideways again. So the market feels like maybe this exchange rate between them is about the right price. We are going to get a big breakout of this, though, and this is around the first half of next year, which is when the Bitcoin halving takes place. If you look at every other cycle after the Bitcoin halving is a bull market for BTC. Now, it may not be as big as previous occasions. There may be a lot of more regulation coming out, but we should assume Bitcoin strength towards the start of next year. So you've got crab sideways market, you've got regulatory uncertainty over the next, 6, 12 months, and you've got the Bitcoin halving. So everything is really pointing towards the fact that Bitcoin dominance is the most likely outcome over the next 12 months, especially leading up into that market. For altcoins, that would probably be after that. And so you're looking, maybe 24, 25 for a resurgence there, especially if you get, some court cases that go well. So it depends on the investor, whether you think you just want to invest in the dominant player over the next 12 months, or you want to take some more speculative bets with very low prices where thing could go not very well, or you may get some good news that actually pushes up, because you're not going to make 10x's investing in a bull market. You have to invest during this part of the cycle in altcoins if you want to make the 10x. Unfortunately, that just means that there's going to be some big casualties as well, but that's altcoin investing. So watch out for CPI tomorrow and also the FOMC meeting, because what we may witness this week is the flip in the central bank cycle, the flip from interest rate hikes to we're now done. This could be it. It may not be it, but it definitely could be. So this is what this price action has been trying to price in the whole time, which is that central bank flip. And from that, we may get a malaise in the market because the recession plays out, unemployment ticks up. It's not bullish for Bitcoin. However, what is bullish is that central bank intervention to the flip side, which is always bullish for BTC, or it has been every single other time. And that's when you get the real bull markets. But for right now, it's still a crab market. And for the rest of this year, it's not the bull market. But what happens under the surface, if the central banks are done, you know that you're coming into that part of the cycle. And so that is the thing to trade. The next 12 to 24 months, that is the thing to trade. That is the big money maker. Short-term trading, maybe put aside for those bigger bets right now. Anyway, if you're a trader, Bybit deposit bonus up to 30K. Check out BitGet as well, good fiat on-ramps, and another deposit bonus on BitGet. Links down below in the description. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.